And welcome back to my final morning report analysis video on Monday 19th of March with me, Japan market analyst at Hantec Markets. Let's look at gold, which has been tracking lower in the last few days. You've got this succession of negative candles and you've got the momentum indicators that are beginning to look more negatively configured. The RSI dropping back towards 40. If it goes below 40, I think that would be the lowest since mid-December. But also you'd be looking at the MACD line starting to gain traction, having bear kissed lower. You've got the stochastics already having crossed lower and sort of moving quite decisively to the downside. And what you had on Friday was the market closing at its lowest level since the 9th of Jan. So that is again suggesting that there is a downside pressure that is building. And again today, at the moment as we speak, 1311, sort of back towards another big test of this 1300 to 1310 key long-term pivot band. So if the market breaks and closes below 1300, I think that's a key breakdown, and it looks as though the market's positioning for this move. I don't know whether it would happen in front of the Fed. I think it's less. I don't think it's very likely that it would. But I think if there is a hawkish shift on the Fed, then yeah, I think we're starting to look at gold, which could be opening to the downside up and completing what would be generally a bit of a top pattern and sort of breaking down. So yeah, this is the risk that we've got in the coming days this week, and certainly in front of that, the market is sort of having broken down below 13. That is now becoming a base of resistance. That doesn't look great. You got the RSI on the hourly that sort of fails at 60, goes back towards 30. MACD lines falling over under neutral. All sort of plays into the whole negative configuration, negative near-term outlook, and sort of selling into pressure to the selling into strength. So with that in mind, I wish you good luck in your trading, and I will speak to you again tomorrow.